Classic me. Started speaking and didn't even click the go live button. So typical. Let's see Larry Fink, the guy who manages Blackrock, the guy who manages $9 trillion of assets under management. Where does he think a good place is to invest our money? Equities, bonds, cash? He gives us a range of different options, but which is the best one? Not Jim Cramer, Larry Fink. Oh.
As rates go higher, you're going to see more immunization of the old defined benefit plans to lock in. As liability rates went up, we are seeing more and more pension funds, more corporate funds that are actually match assets and liabilities. And so they're going to be able to immunize the volatility. And that means they're going to be...
Sometimes they use complex words, but basically what he means when they match the assets is like 50% in bonds, 50% in stocks. That's what he's meaning.
Selling out of equity.
Which is, for me, it's a little bit crazy. I would never have 50% of my money in bonds, but that's just me.
But he's buying more long bonds, and that will happen. It's not happening yet. But let's be clear. If you could start earning 7% on credit,
right.
If you could start earning 10 to 12% on infrastructure investing as our Infrastructure Act going in, as our IRA starting to be implemented, these are going to be good, healthy, long-term investments that are going to be anywhere from 8 to 15% returns with high probability of success.
Right.
And so that's where a lot of money is moving.
Okay, it's like, Carl, when I was talking about how the rich people come on and there's like basically it's perilous forgetting, this is what I'm talking about. That's the opportunity.
Correct.
And people who are listening should say, you know what? In this time of peril, did he just say I might be able to get those rates? That's pretty darn good.
And, right now we're facing a lot of headwinds.
I'd take an 8 to 15% return any day of the week, especially at these market prices.
On geopolitical issues. Hamas invasion of Israel, the horrific acts, that creates a lot of fear, and people are actually pulling back, watching this. At the same time, and the headlines of every newspaper, every website is about the fear issues about the world. But if you overlay the opportunities in investing in AI and robotics, the opportunities in nearshoring and recalibrating supply chain. Now, if you overlay, because you were talking about the healthcare companies, now if you overlay the incredible transformation in with Ozempic and other items, what it's going to do for longevity of life.
Yes.
Okay, this week we discovered that these drugs can help in renal failure. They can help in other things. Now, if you overlay that and like Eli Lilly's drug for Alzheimer's that extends the pathway by at least 40%. This is creating hope. And so a lot of people ask me, why isn't the market collapsing? Okay, because of all of this. We're not spending time talking about these opportunities of, there is incredible medical discovery that is elongating life. We have great recalibration of supply chains that's going to bring jobs here, opportunities here in the United States, in Mexico and India and other places. So, we're spending so much time on the negatives, but all of this just tells me why you need to continue investing.
Yeah. Okay.
These are the opportunities.
Yeah, so he sees a lot of opportunities in the market. He talked about AI, he talked about robotics, and the other thing that he mentioned was all these drugs that are increasing longevity. I don't know how much you guys think are these drugs actually effective? These drugs that you take and they relieve Alzheimer's, is that actually a thing? You just take a drug and then your memory comes back. Is that real? Apparently. And what are the side effects as well? That's my main concern when they come up with all of these miracle drugs that can save you, and Ozempic and how they're stopping obesity. What's the side effects? If this drug does it just get rid of our appetite so we don't become fat anymore? And what does that do to our brain? That's my main concern. Anyway. And the other interesting thing that, if you picked up, he said he sees he said 8 to 15% return or 10 to 12% return in infrastructure investing. I've never really even gone into infrastructure investing in my life. Basically, it's just investing in real assets that contain physical assets we see in everyday life, like bridges, roads, highways, sewage systems, or energy, which is a pretty cool investment. Imagine saying, yeah, I own a piece of that bridge, I own equity in that bridge. I own equity in a sewage system or equity in a highway. Imagine owning a piece of a highway, and then every time someone uses the highway, they have to pay you a toll. That's an interesting investment. There's a lot of positives. So he said that like there's a 10 to 12% return in infrastructure investing. Often investors invest in infrastructure. It's non-cyclical, so people are always going to need infrastructure. It's not like a Lamborghini where if times are tough, we're like, okay, we might need to sell it. No, we always need to drive across a bridge to get to another town. It offers stable and predictable free cash flows, low variable costs, high leverage, so you can borrow a lot because there's a lot of consistent money that will come in. So these are the positives for infrastructure investing. Maybe you guys will want to look into it. And also, like, how the heck do you invest in infrastructure? Maybe do you just own stocks? Ways to invest in infrastructure. There are two ways to access equity investments in infrastructure assets: through listed infrastructure securities. So that's just through securities or equities on the market, or via unlisted infrastructure investments. That's where it can get a bit more risky, but also a lot more opportunity with these unlisted ones, which could include private ownership of assets or shares of unlisted funds. So there might be potential in that asset class of the market if you guys want to spend some time looking into that. And it also is pretty cool. Imagine owning a piece of a bridge or a tollway or a railway or, you know, some of these different things. Some water management thing or some gas setup. That's an interesting investment. What other asset classes does he like?
Do you think that means the median age of the marginal equity buyer rises?
Yes.
Where you'll tolerate risk later in life?
The median age of the marginal equity buyer. Basically, he just means, do you think we're going to last longer for life? Are we going to, is our age going to go up?
I am.
And be able to invest for longer?
I'm older. No, there's no question. I think the traditional reallocation, I think the 60-40 type of thing, I think, for a long-term investor, long-term view, who can tolerate market volatility, you should be at least 80% in equities or hard assets.
Amen.
It could be real estate, it could be infrastructure. And if you could really tolerate it, in my mind, you should have been 90%, 100% in equities. Now, a lot of people can't afford that type of volatility.
This is a radical view.
Yeah, but if you're 100% in equities, what happens if the market crashes? Then you have no cash to buy up extra equities when the stocks are cheap. So I don't know about 100% in equities. My approach is more like, 80% is not bad advice. It depends where you are, how old you are, obviously. But yeah, Warren Buffett, he's normally 80-20, right? He owns a bunch of cash and treasury bills, but then most of his money's in equities and stocks.
And yet it's an empirical view.
It proves out. You got to have a 10, 20-year view. Right. Okay, I'm a hopeful person. I believe that in 10 years and 20 years, humanity is in a better position than it is today. With that view, I want to own hard assets. I want to own equities. I want to be a part of this economy.
Do you think that means...
Yeah, well, you're a big part of this economy. I mean, you are the CEO of Blackrock, which has $8.5 trillion of assets under management. Don't worry about being a part of the economy. Some people have been arguing that you're too much a part of our economy and you have way too much power. That's what they're saying. I don't know. How much power does he really have? Blackrock, they say the market cap is, I don't know how big because they don't own the assets that they manage. They may have $8.5 trillion of assets under management, but they don't own it. They're just managing it for other people. So people say, yeah, he has a lot of power. And then other people like the Plain Bagel say, well, no, he doesn't actually own this. He's just managing it. So how much influence does he really have? Is he the man that controls the world? I'm not going to go into it, to be honest. But I don't know. I watched the interview from him and he seems like a likable, nice guy anyway. So 80% in equities. As I say, it really does depend how old you are. If you're a young guy like maybe I am, and you've got, I don't know how long left in this life, but hopefully 70 years or something. Obviously, I'm going to want to pretty much have all my money in equities because equities over the long term perform so well. And then I can just let them compound at a high rate over time and hopefully make me a lot of money. But if you're 70 years old or 60 years old or however old you are, then maybe you want to be more conservative. And traditionally, at least per like the Roth IRA and the retirement accounts and a lot of hedge fund type investing, they will recommend you need to have 40% in stocks, 50% in bonds, 10% in cash. And Larry Fink is saying, well, perhaps be a little bit less conservative and have more money in stocks, because you might be living for longer. You might be able to take these magic pills which make you live an extra 10 years. And that's his strategy. And yeah, as I say, you have to work it out for yourself. How much longer do you have in life? It's a bit of a weird question, a bit of a morbid question, but it's practical. And then you work out, how much should I have in stocks? How much money do I need now? How much money do I need in cash? How much do I need in bonds where I have a guaranteed yearly return? These are the questions we need. Most people should be asking, but of course everyone's more focused on like YouTube and other types of drama. But that's Larry Fink. I want to get into Puda Jones now. Puda Jones, he's a trader. He was a really good trader 30, 40 years ago, but he still keeps track of the market, and let's see what he's saying.
I think equally as much of a problem is the fiscal situation that we're facing in the United States, which is going to require a completely different political mentality.
That's pretty telling. So we're the possibility of a real possibility of a nuclear war is there, but our fiscal situation is just as bad. That's a statement. So black swans, Paul, they're not black swans anymore. They're actual quantifiable risks. We need a new word for black swans. There's like 4 or 5 of them that used to be, you didn't even have to really, if it happened, we're all gone anyway, so you don't worry about it. But now they're actually something that are on your radar. Well, so is a pandemic, which was on your radar in Davos before anyone knew the word.
I would say the fiscal situation is very different from other cataclysmic events that we've suffered as a country. It's not Pearl Harbor. It's not 9/11. It's not COVID, where we did not see them coming. They were external shocks. The fiscal situation we have is one that's really clear.
So I just want to be a little bit more clear on exactly what he's talking about before he continues. I'm sure a lot of you guys probably know exactly what he's talking about, but I do like to be clear. Fiscal just means relating to government, and essentially what he's talking about is how much debt we have on hand. And he's comparing this to this being a massive, massive problem in today's economy. And he's comparing this to the likes of black swan events and massive crashes and pandemics, and which is the bigger risk.
There are obvious remedies for it, and it's something that we're going to have to deal with. It's not part of the political dialogue yet, really. I don't think so.
Entitlements again.
It's a variety of things.
But mostly.
If you just think about what's happened since really in the last 3 or 4 months, we're getting ready. I don't know if we'll have a Minsky moment in the bond market.
I don't know if you guys prefer me interrupting, but Minsky moment just means a massive crash, a bubble burst, the market collapse. Things go well for a long period of time and then boom. Minsky moment refers to an abrupt market collapse or bubble burst following a long bullish trend.
I don't know if we'll have that point of recognition, but we're going to have the grinding reality that with 122% of debt to GDP, as interest costs go up the United States, you get in this vicious circle where higher interest rates cause higher funding costs, cause higher debt issuance, which cause further bond liquidation, which cause higher rates, which put us in an untenable fiscal position. Our interest bill is going to very shortly exceed our defense spending in just a couple of years. It's probably in 4 or 5 years, ceteris paribus, we'll have the highest interest bill as a percentage of GDP that we've ever had. It'll probably be close to 20% of your taxes will go to pay interest on the debt unless we do something. So that has to be part of the dialogue, has to be the main dialogue for next year's presidential election. I think
that's pretty scary, eh? Imagine 20% of all your spending just goes to paying off debt. That's when you start to reach that bottom of that vicious cycle where you're struggling to get your head out of water because you're just constantly having to pay your debt payments and you can't spend your money on practical things. So I want to just be a bit more clear on exactly what he's saying. So he's talking about USA debt, and I don't know if you guys have paid much attention to this, but debt has just shot up like a rocket, and it's getting very crazy, especially over the past sort of 15 years. So 2008, we had that massive housing collapse and a lot of panic. What do they do when there's panic? What do they do when there's a recession? They print a ton of money, and they borrow a lot of money as well. So look at public debt since 2008. 2008 was around $9 trillion in public debt. 10 years, they just started borrowing more and more and more, 20 trillion. Now it's $32.3 trillion of debt that we have. And again, in the 2020 pandemic, it shot up massively. Look how much debt we got in just sort of 3 years. $10 trillion in debt in 3 years. So you thought we were okay. You're getting all these stimulus bills in the pandemic, but that money has to come from somewhere, and a lot of it would have come from just borrowing more and getting in more debt. That's always the answer. But you also do have to compare this debt to something else, because in and of itself, you don't know how big a debt that really is. Like 33 trillion, is that a lot of money? How much is it? So you have to compare this to something. One of the best ways to compare it to, best things, is GDP, how much we're producing as an economy. And yeah, so we used to have 60% of GDP of debt to GDP. So we were producing a lot more than our debt. But now it's gone to 120% of GDP. So our total debt is more than we produce in a single year. That's not how much profit we get in a single year. That's total amount that we produce. So that's a lot of debt. And the problem is, when you have so much debt, is you have to pay interest on that debt. And this is where we're sitting at right now, is this interest on the debt is just going more and more and more. And now we have less money to spend on these practical things like Social Security, Medicare, Medicaid, defense. We're spending more of it on just paying off our debt. Not even paying off, just paying the interest on the debt. So this was 2011, and now Puda Jones is saying that interest on the debt is creeping up to 20%, even more than the amount we spend on defense. So yes, we're going to have to spend less on defense, less on Medicare, less on all these practical things, and just more on debt. This is a big problem that we're facing in the economy and the market today. Ray Dalio, what do you think?
Cash now has a relatively attractive appeal. Sort of people, when I said cash is trash, and that got a lot of attention. But that's when cash was nil. Okay. Now, when you look at the expected returns for this moment, cash is a relatively attractive asset class at this moment. It's not just attractive because it has a relatively decent, not great, but decent expect. In other words, it has something like a 1.5% real return. Okay, not bad, and not bad in comparison to the other things, and it doesn't have price risk. So it looks relatively attractive.
What does he mean when he says we have a 1.5% real return? So let's just break that down. He's saying, well, where should we put our money? One option is cash, one option is stocks, one option is bonds. Is cash good? Is cash a good investment? Ray Dalio used to have this saying that cash is trash. I actually made a video on it. Maybe it will come up on YouTube. Maybe someone else's video will. Cash is trash. So yeah, 2 years ago, 3 years ago, he was saying cash is trash. Don't invest in cash. Don't hold cash. What does he mean by cash? Essentially, he's talking, these 3-month treasury bills where you have your money in cash and you get interest on that cash. Or a bond payment on that cash, or yield. Right now, so in 2020, when he was saying cash is trash, you were getting nothing. You're getting no yield on the cash you had in the treasury bills. And so he said cash is trash, rightfully so. And right now, you get 5.5%. So look how much that's gone up in the past 3 years. Crazy. So now he's saying cash is actually not a bad investment. But you also need to take into account inflation. So inflation right now is 3.7%. So this is what he means when he says a real return. We get a real return of about 1.8%. So it's not bad. Cash is looking like a much better investment in this day and age than it was back in the day. But again, you have to consider, how much do you want in cash? How much do you want in equities? I'm generally more of an equity type guy. I prefer to have a lot in equities, but the more that this graph goes up, the more cash I want to own. So, because you always have to compare the yield that you're going to get in equities and the yield that you're going to get in cash, and which is better. Normally equities will be better, but you do have more risk with equity. As Dalio said at the end there, you have price risk. Equities can crash. Equities can go up and down. They're very volatile. So that's the decision we all have to make. The other point I forgot to say on the debt situation was, how do we actually solve this debt thing? You know, like 120% of GDP, $33 trillion. Like, what do we do about this? Like, is it ever going to be solved, or will at some point we'll just be paying all of our spending on interest and we'll just have nothing to pay on all these practical things? So there's a couple of key ways you can pay off debt and then like decrease that interest on the debt. One is you can raise taxes, which everyone hates. Like, imagine someone going to government and saying, yeah, we're going to raise your taxes. Everyone, we're going to increase your taxes because we need to pay off debt. Not that many people are going to vote for that, for that person who says that, because no one wants to pay more taxes. So are they really going to do this? Puda Jones said we need to raise taxes, but is the government going to be practical enough to do so? I'm a bit reluctant to say they will. The other thing is reduce government spending. Again, like, do you think a politician's going to say, yeah, I'm going to come into government, and when I am, I'm going to reduce our spending. We're going to have less Medicare, we're going to have less defense, we're going to have less Medicaid, less practical things like healthcare. Who's going to vote for that guy? No one. So probably what they're going to do to solve this debt is print more money, which is what they normally do. And the big problem is when they do this, it causes inflation, because the more money that you have for the same amount of goods increases the price. And yeah, so 5-10 years down the road, how much inflation are we going to see? This is the big problem that the USA faces today. Now, I want to get into some news, what's been going on in the market, what are the big things, because I think it is important just to keep track of what's happening and then try see where the opportunity is. Now, one of the big pieces of news is that hedge funds will now be forced to reveal the names of the stocks that they are shorting. The SEC will officially announce this later today. Hedge funds will be forced to reveal short positions in certain stocks at the end of each month, including derivatives and swaps. SEC will then aggregate all the data before publishing it. And this is going to be pretty cool because, you know, now people like Michael Burry, instead of just having all of these cryptic tweets where we don't really understand what you're saying, we get to see what stocks he's shorting now. Not just the USA stocks that he's owning, but now we can see the stocks that they're shorting. So it's going to be interesting for people like me who are in the news sort of sector or just general investors. We can see, what stocks you're shorting. And, think about GameStop 2 years ago. We couldn't actually see the hedge funds that were shorting GameStop. Now we can. So thank you, SEC, I think. What else is going on in the market? Microsoft has finally closed the $69 billion buyout of Activision Blizzard. Like, Microsoft is becoming such a massive company. They recently, I think they bought OpenAI, or they effectively bought it. Now they've got Activision Blizzard. How big is Microsoft in this day and age? Microsoft market cap. Seems like they're just buying everything. Like AI, boom, buy the biggest company there. Gaming, boom, buy one of the biggest companies there. Their CEO is so smart. I've listened to like a few of his earnings calls and stuff like that. He's really smart, and $2.5 trillion company. It's almost as big as Apple, right? 2.8 trillion. So there we go. I remember Buffett had some sort of position with Activision Blizzard. He was looking to make a little bit of money on a little bit of arbitrage there to say that they were going to go through, but then he backed out of it. Anyway, now the deal has gone through. There we go. Argentina. Any Argentinians we have out there? Central bank has increased its interest rate to 133%. My brother's actually in Argentina right now, and he talks about how crazy their inflation is. 133% interest rate? So what? If you have your money in the bank, you'll get 133% return. But then inflation, inflation in Argentina is crazy. What's inflation in Argentina? Also, a lot of these graphs aren't 100% accurate. Yeah, inflation's 140%. So yeah, you make no real return. Yeah, you think, oh, I'm going to make 133% return. No, because your real return is minus because inflation's 140%. Let's see what else is going on. Blackrock. So that's obviously what we were talking about before. Larry Fink is the CEO of it. I don't know if you paid attention to this, but so BlackRock's router story on Bitcoin spot ETF approval is false. So BlackRock were looking to make this ETF of Bitcoin, and then this rumor came through saying that it had gone through and the ETF had been made, and then Bitcoin just shot up in price. And now we've just got the news saying that this is a false rumor that someone hacked, I think it was some news site's account, and wrote a report saying that it was true that it had gone through, but now it is false. We know that. And so Bitcoin is back to its sort of regular price. Let's see what happened to Bitcoin then. Yeah, so it shot up, and I don't actually think this graph is fully accurate, but basically it shot up once the news is, and then it went straight down. So LinkedIn is laying off 2.5% of staff, or 500 people. I don't know how many people are actually on LinkedIn these days, apart from, the older generation, like maybe Ray Dalio. Yeah, is that actually grown in users? I'm not sure. But yeah, LinkedIn are laying off staff. So this is the company that's meant to find people jobs, is now laying off employees. Then RollsRoyce to start laying off thousands of employees in order to cut costs. Now, I've seen quite a few of these different stories of people laying off employees. 2 years ago, there was a lot of expansion in the market, but now it seems that we're cutting back. Now we've got, Cathie Wood. She's not exactly she's no Warren Buffett, I'll say that, but I don't mind her. I think she's a decent gauge of what's going on in tech, and I'll still read her opinions on things, but I don't take them as God's word or anything. ARK Invest, Cathie Wood said she thinks the upside surprises for Tesla will be much more than Nvidia. I don't know, what do you guys think? So Tesla, what's Tesla's upside? I mean, they got so many different ways of making money, right? They got the whole automatic driving where they can replace companies like Uber. You no longer need Uber and all of that. They got their solar panels and the solar thing they're in. They got all the electric vehicles they could sell. Then you got Nvidia, which just do chips. But I guess they could sell way more chips with the likes of AI coming in and all the contracts that they can get there. So that's Cathie's opinion. And 2 earnings reports we'll go over. JP Morgan earnings is just out. So they beat their revenue and they beat their earnings per share. So that's pretty good. They got actual earnings per share of $4.30 compared to $3.90, and actual revenue of $40 billion compared to $39.9 billion. And the other bank was Wells Fargo. They did pretty well. Wells Fargo revenue $20.8 billion compared to $1.6 billion. They beat that. And their earnings was $1.48 compared to $1.25. They beat that as well. So anyone who owns those 2 stocks, congratulations. You've done pretty well. That's all I wanted to do. I wanted to just go through the news, keep up to date with the market, see what's going on with different companies. And yeah, we went over a couple different opinions, couple different ways of investing and styles. Dalio thinks that cash is no longer trash, so it's still a decent investment to have your money in cash and the likes of treasury bills. Larry Fink, CEO of Blackrock, says you should actually be looking at having more money in equities, because we might be living for longer, and be a little bit less conservative. And poor Puda Jones says the main thing we need to focus on is government debt. That's what the politicians need to be talking about, and how can we solve that, or else there's a big problem down the road. Guys, that's it for the stream. Thanks for watching. Appreciate it. And so got a comment. Sorry for interrupting, but how many times a week do you plan on going live? I don't know. I don't have a direct plan on how many times a week I plan on going live, Lawrence. Maybe for the next month I'll try. I want to try doing it more. I don't even know. Am I good at going live? Do I have a specific talent? Am I helping people? I'm gonna play it by ear and see if how much do I enjoy doing it. Right now, I really like going live. I think it's a beautiful sort of way of making videos, because you're not scripting things overly, and you have to be real. You have to be as honest as possible. I like going live, Lawrence, and I want to do it more, but I have to see if I have some sort of talent for it. Am I making good content with it? Are you guys enjoying it? If not, I'll stop doing it. Of course I'll stop doing it. So I want to do it more. I want to try do it. And also, is there something to talk about? I don't want to just rant about nothing. Like, we have to do things with a purpose. What's the purpose of what we're doing? Is there something interesting going on in the market? Is there potential opportunity? If there's nothing to talk about, I'm not going to go live, Lawrence. So I want to go live as much as I can, but only if I can deliver good quality content. Thank you. I appreciate it. Thank you for saying you like my content. I just want to try make as good content as possible for you guys, but not also for you guys, for myself as well. Like, I want to focus on investing as much money as possible in the market, and I want to see where I think there's opportunity in the market. So it's for me and it's for you. I'm not going to be like, one of those guys saying, oh yeah, it's just for the audience or whatever. No, it's for myself, and also obviously I want to do right by other people. So thanks for your comments, Lawrence. I want to go live more, and as long as there's interesting things to talk about and useful things to talk about. Thank you everyone for watching, and good luck with your investments, and I'll see you in the next week. I want to try go live tomorrow, by